In this video, I made a really quick list of the 5 best ETFs for beginner Canadian investors. And they're just really commonly recommended ones for people looking to get started in investing. So if that's you, definitely stick around as I'll go over the top 5 ETFs you can start investing in now. These are all low cost, really reputable ones that find a great place to get starting on your investing journey. Obviously, this isn't legal or financial advice, but rather just a combination, a lot of research I've done, and a lot of other good videos that have been made on it. So let's hop into it here, and I hope you'll find this useful. The first one is VFE. That's the Vanguard S&P 500 ETF, specifically Canadian. So this provides exposure to the biggest U.S. companies as it tracks that S&P 500 index. This is sort of the golden standard or benchmark for investing. This is what most people want to invest in, and it just provides Canadian investors really easy access to that broad, diversified range of U.S. stocks, which obviously weighs a little bit heavier in technology, healthcare, and consumer goods, and whatnot. Reason you'll want to consider this and why it's recommended is it's historically known for strong performance and makes it a solid choice for really long-term growth. It's a great option for anyone wanting to diversify their portfolios with US stocks, but also avoiding the complexity of purchasing those individual stocks. So obviously the performance of this mirrors the whole US economy, especially in times of expansion where you'll see really good capital growth. Another benefit or tip, it's really ideal for people who want to, again, invest or bet on US markets, but don't want to also deal with the currency complexities of buying a typical S&P ETF like VU or SPY. Obviously, this is in Canadian dollars and it's unhedged. So, if you're trading on Wealthsimple or something where you don't have access to US dollars, you'll find this really insightful. The next one we'll talk about quickly is ZCN. It's just a BMO TSX ETF. So this just provides exposure to the whole Canadian equities or the broad market, the S&P TSX index. So basically the S&P 500 for Canada. And yeah, ZCN just tracks that index, which again, is just a primary benchmark for the whole Canadian stock market. It's going to provide exposure to a broad range of Canadian stocks. And it's going to weigh a little bit more in industries like energies, finance, and materials, which are sort of the big ones in Canada. And it includes really all the companies from sectors that are a big part of the Canadian economy. Reasons you'd want to consider this is it's a good pick for Canadian investors who want to invest in their home country stock market. And because it has such a wide variety of companies, it provides great diversification across all of these Canadian companies. It's obviously, again, as an ETF, going to be a great tool for tapping into all those sectors without having to pick individual stocks. Another little extra benefit or extra tip is it's a good option for people who are maybe a little bit more conservative, as the Canadian market tends to be a little bit less volatile than the US market and will provide a little bit more diversification. Generally, the S&P has underperformed the S&P 500, but again, provides some good diversification, especially if you are Canadian and want to hold some Canadian stocks. The next one, which is another really popular ETF that we hear about so much, is XEQT, which is the Global Equity Exposure All Equity Portfolio. So this is another ETF, but it's all equity, and it's designed to provide exposure to global markets, which includes Canada and the US, obviously, as well as several international regions. It offers broad diversification as you'll hold stocks from across various geographies, industries across the globe. So it makes it a great option for people really wanting to invest globally in a single fund. This is going to be really good for younger investors with maybe a little bit more of a higher risk tolerance. Again, because it's fully equities, there's no bond or cash, which generally tend to deliver higher returns over time compared to bonds. And again, it's going to be a great fit for anyone looking to get exposure to several countries without having to pick individual stocks or even individual ETFs, where you maybe have a Canadian one, a US one, an emerging one, or whatever. The last ETF we're going to look at here quickly is ZAG, which is a BMO aggregate bond ETF. This ETF provides bond market exposure to both government and corporate bonds. As this ETF, ZAG invests in a variety of these bonds. Again, government bonds, corporate bonds, and other fixed income securities. It's a really broad-based ETF, and it offers income generation through interest payments from the bonds and reduces a lot of volatility in a portfolio. This is going to be more recommended and better for really conservative investors, and those looking to balance a stock-heavy portfolio with some stable income, as bonds obviously tend to be a lot less volatile than equities over time. They can definitely provide a cushion against market downturns. So again, this is a great choice for people maybe approaching retirement or looking to reduce risk. The very last one, just a little bonus one we'll look at is cash ETF, CASH, or HISA.to. They're basically the same thing. And these are just high interest savings account investments. These are actually a pretty new concept, these cash or savings account ETFs. And they're an ETF that just invests in high interest savings accounts in Canadian banks. It's a really safe, low risk option that provides liquidity and offers a return that's higher than a traditional savings account interest rates. So yeah, it's great for people who want to preserve capital, earn a little bit of return. And the main appeal of this is that it's a really safe place to park money, and it provides a higher interest rate than your typical savings account. You can also invest in your registered accounts within this, so money in your FHSA. You can buy cash, earn a little bit of interest with a lot less risk. So anyways, that's the video. A few quick ETFs. And these are, really common options for Canadian investors looking to diversify and get into investing, especially for beginners. And they kind of cover all the main areas: equities, bonds, cash, Canadian and international. So it gives you a good chance to diversify if you're interested in that. But definitely make sure you evaluate your personal financial goals and choose funds that align with your investment strategy. So yeah, that's a video. If you have any questions, leave them down below in the comments. Me or anyone else can get back to you. And if you like this type of content, make sure you like, comment, and subscribe, and stick around for the next one.